Hello again, this is Alex with MasterChartsTrading.com, and this is Friday, July 19, 2019 market recap. So, stocks again are trading very close to record highs, obviously bullish development. Several stocks, sectors rather, hit records, namely technology and consumer staples. One of the industry groups, semiconductors, are driving the technology sectors higher as it hits fresh highs. We'll look at interesting charts. Turkey was in the news recently. I'll look at Turkey and Turkish lira later on in the presentation. So we'll give a couple more examples for Walmart, waste management. We'll look at real estate IYR and look at the yield curve as it improves somewhat and it's pulling real estate lower. So commodities, not really much this week. We have a trade going for oil, so I'm not going to cover it. I will cover copper, and we'll see if it's moving towards breakout. Gold at fresh 52-week highs, and we will look if the dollar is going to weaken anymore. I think gold will just take off to the upside, and we'll look at some of the components of the dollar as well as just separate currencies like ruble and Turkish lira. And today was cryptos. We'll only look at Ethereum because we also have a couple of trades going for Bitcoin and Litecoin. All right, so let's start off with S&P 500 as usual. So here's S&P 500. ETF SPY recently at record highs, very close to record highs again. I mean, this is a big move, so a normal correction. I think we're gonna see at least a pullback to the green line, which is currently at 289. So again, throughout the presentation, I'm going to be using my own indicators that you can find out more at MasterCharts Trading. These indicators basically help me visualize price action and make it easier to make decisions on trading. For example, do I want to be buying or shorting? Well, here is one such opportunity that did occur in the beginning of June for QQQ, and you can see that uh, price basically just bottomed out around the indicator line and then rallied. So this is the essence of what I do. Basically, this is all I do in the stock market. I just look for a pullback towards my indicator line, in this case blue line, and then I just buy it there. And this is as simple as it gets. So we want to simplify trading as much as possible. We do not want to complicate it. Notice I do not use volume at all. I think it's not very useful. Dow Jones also at record highs, very close to record highs. So we will just keep our positions open, and we have a position open from early June, late May. Stocks that hit record highs are within the technology sector. XLK, similar to QQQ, but you can see QQQ did not hit the record high. XLK did hit record high, very strong looking chart. So same thing, basically just wait for a pullback and buy on the pullback, because we already know it's a bullish security. How do we know if it's a bullish security? Because we have originally closed above the indicator line. For example, in this case, for XLK, it happened on February 2019 of this year. And then from then on, we just simply look for pullbacks and we buy the pullbacks. So we have two different scenarios. One is initial breakout, as for example for this occurred in February, and then we also have pullback towards a good level to be buying. XLP record highs as well. This is consumer staples, a little bit defensive sector, but that means pretty much nothing, because all we need to know is this a stock sector? Is it a stock fund? If it's a stock fund, then we can just keep buying basically. Whatever is during the bull market, if it's pulled back enough, then we should just keep buying it. So for example, for XLP, consumer staples, In this case, we see a breakout in February and then pullback in March, and that was basically it. And then it just took off. And again, notice that the best thing to do with stocks is to do as little as possible. So, for example, if we opened back where I just showed, we would have had already 11% gain on our hands because we opened back in March. So that's about here, and that's about 11% gain for a fund, and specifically for a staples fund, which consists of a little bit of a lower beta stocks. This is a large move. So again, this is the reason why I keep saying that stocks tend to go up, and again, we want to keep them as long as possible. We do not want to sell them prematurely. Within the XLK, within the technology sector, we can see that XSD semiconductors hit record highs as well. Semiconductors, especially this is a diversified semiconductors fund because you can see XSD. There's also SMH, which is heavy in kind of like industry leaders. Hasn't yet hit record highs, but the fact that XSD, the very diversified fund, hit record high is a very good sign. So in other words, there is broad participation within the very volatile sector, and this means that investors are really thinking that stock market will continue higher. There is really not that much of fear yet that I'm aware of. I want to look at some of the price action in the foreign markets. So this is a Turkey ETF. So this is a United States equivalent of Turkish stock market. Actually, yesterday I opened position myself at 25.53. Why did I do that? Now, it's pretty obvious because notice on this chart the price has been pretty much below the blue indicator line, as you can see, since a while back, since like March 2018. And to me, this looks like a new breakout, a new bull market in Turkish stocks. Now, I mean, there is a lot of talk right now about Turkey and how they bought the Russian components, rather Russian anti-airplane defense missiles. So for now, the way I'm looking at this chart, I am not a politician, I don't know much about politics, but I'm looking at this chart and I'm seeing investors liking whatever is happening. And since I'm a trend trader, I don't really care much about anything else except for a trend on the chart. And to me, this right there, yesterday on 18th of July, was a breakout. In other words, now I'm thinking about Turkey as being in a bull market and it wants to go higher. Before, I was thinking about Turkey as being in a bear market, and you can see, for example, right there on the 30th of January 2019 of this year, I didn't send this alert, but if you really wanted to, you could have buy puts, for example, right there. And you would have been correct because you can see continuation to the downside. Now, eventually, this, bottoming process is completing, and I think now the bottoming process is complete indeed, and now we have a new bull market in the Turkish stocks. USD TRY, also Turkish lira. Now again, I'm not trading this is quite volatile, so be very careful. But overall, I can see USD TRY breaking down in favor of Turkish lira. So in other words, Turkish lira will now appreciate, and with it, potentially the Turkish stock market. A few trades I wanted to highlight, perhaps humble brag about. Unfortunately, I didn't actually open myself, but Alert was sent to my subscribers. Here's Walmart. Again, straightforward. So back in February, right there on 13th of February, this was the initial breakout. Um, these are actual alerts again, and the final alert right there from 1st of April, not a fool's joke, obviously, turned out to be quite nice. Walmart is now at record highs with over 18% gain. Again, really straightforward, really don't need to think. How do we put these indicators on your chart? Just contact me. I can set you up in half an hour. You can be trading quickly. You do not need any other accounts. All you need to do is sign up at MasterCharts Trading. I'll share these indicators with you. Another interesting opportunity that happened actually a while back again. So several alerts for waste management, and this happened actually in late last year, November, and then another one was in December of last year. And again, this is showing that it is probably better to hold stocks for longer term than to just trade in and out. Because look at this massive 33% gain. Um, I mean, some people say that, oh, look, it's at record highs back in January, and then it cannot get any higher because of some profit and loss, profit and earnings, profit to earnings rather ratio, P&E ratio. Yeah, don't worry about any of that stuff. Just look at the chart and see if the security is bullish, then you just buy it. If security is bearish, for example, if stocks are bearish, I would just avoid it. But if you really know what you're doing, you can potentially short it. In this case, it's just straightforward trade. Walmart, Waste Management, beautiful 33+% gain, and it's set to continue. Looks like. Let's switch gears a little bit. Let's go in a bit a more defensive sector. So this is real estate, IYR. So again, alert was sent a while back in January. It was a very nice gain, but this is not what I'm wanted to highlight. So real estate, these are actually record highs also just a few days ago. Now we have a pullback towards the green line and just a general kind of potential top, and maybe this is a double top, maybe like one top on June, another top right there in July. So here what I wanted to highlight is the relationship between real estate and the bonds. So the relationship is not very strong, but of course, as you know, real estate requires borrowing of large amounts of money, and the lower the interest rate, the more you can borrow. Makes sense, right? Now, if the interest rate has been actually decreasing more and more and more, and it makes sense that the real estate has been going up and up and up. So a few, weeks ago here in 3rd of July, you can see a bottom more or less, and now a move back in the interest rate. Now this is TYX 30-year Treasury note yield. It moves opposite to bonds. Here's TLT 30-year Treasury note. And you can see potential tapping pattern here on the 3rd of July and then a pullback. And then together with that, real estate also pulled back. Makes perfect sense. So I'm now wondering if this pullback in bonds is over, and it doesn't look like it's over. Maybe I think we may see more unwinding of this quite overbought condition. I mean, this is a big run for bonds. Look at this. From 4th of March, for example, here's an alert, and this is a big gain. This is over almost 12% gain. For bonds, it's a lot. So I think a pullback is not yet done, and we will need to watch for potentially further increasing of the interest rates, which actually is not that bad. So let me show you why. So again, I keep showing the same chart. This is a chart from StockCharts.com. You can find it on If you click on the charts and tools, it's a free, it's called dynamic yield curve where I'm hovering. If you click on that, you can find this instrument. Okay, so here on the left where I'm hovering is the actual yield curve. You can see 3 months, 2 years, 5 years, etc. and the yield that it is currently at. So you can see that the 3 months yield is still above probably 10-year yield. Not a great thing, but at least it's significantly below the 30-year, what I just showed you. 30-year is currently at 2.58, and you can see that it is below the 3 months yield. Why do I worry about it? As I keep showing, I'm afraid that we will have an yield curve inversion event, as for example occurred here in April 2007, or for example here in July 2000. And after that we saw market go down. So right this instant the event has not yet occurred, which is a great thing, because I think we could see potentially a significant drop in the stock market, and I do not want to see that, obviously. So for now, I think it's actually a very good thing that the TLT, the treasuries, are pulling back. I mean, I have a position, but I'm also cognizant of the economy. So hopefully this will continue, TLT will continue to pull back, and the yield will continue to rise. This situation is not ideal, but it can be rectified by Federal Reserve just lowering the interest rates a little bit, so that the yield curve becomes normal, like that, for example. This is a normal yield curve. All right, let's continue. Let's switch gears. Let's go look at commodities. Here's one commodity I don't normally cover, and that's copper futures. You could trade it with a retail ETF. Now, you can see this is a retail ETF called CPER. It has a very low volume, so not ideal. Also, if you're going to analyze commodity-linked ETFs that don't actually hold the commodity, for example, gold, GLD, actually holds the commodity, so it tracks really well. I'll show you in a second with the indicators. But with copper, this is based on future, or rather on options. So I would not use my indicators to analyze this type of ETFs, such as UNG, for example. Also, do not use to analyze it. But for the purposes of trading, we can simply look at the futures, and futures are HG1 exclamation point on TradingView. So here are a couple of alerts. One occurred here on the 7th of May, another occurred here on the 1st of July, both successful. You can see a significant gain or loss, because they were shorting in this case. I was going to short it here as well, but something stopped me. I just didn't feel like this price action was significantly bearish. And then, boom, today we had a big run higher. So I'm wondering now if the copper will break out above 2.82, and then we will need to be buying it. It's a lot easier to be buying it at retail level. Okay, so again, CPER would be not a great option, but a somewhat viable option if you want to trade copper on the retail level. Ideally, you should have a futures account. All right, let's continue to gold, and then I just showed that gold and XAU USD or gold futures track really well. In other words, there is no slippage. You can see XAU USD, and then you can see GLD. They're identical, basically, except for GLD is only traded, there are gaps, so it's traded through not 24 hours, where XAU USD or gold futures, GC1 exclamation point, are traded basically 24 hours, except for the weekend break. So let's look at gold futures, for example. You can see a high here today. This is actually 52-week high. So I mean, the breakout is looking just beautiful. We have several alerts, XAUUSD, so you can see alert right there, GLD, alert right there, and with over 12% gain. So again, congratulations if you opened. So this price action, okay, so it will depend on the dollar. I'll get to the dollar in a second. I mean, price action is very bullish. I thought we are going to correct, after this um, trading from June 25th till 17th of July, but then we saw another break higher. So perhaps we're just going to continue higher. Perhaps gold is indicating something that we don't yet see in the forex markets, in the like euro versus US dollar. Perhaps gold is thinking ahead. So a little bit more on gold. Here's GDX, gold miners position. See this last candle, or the second to last, this Thursday's candle from 18th of July. It's just huge, and it sure feels like it's a top-in, potentially top-in candle. So I'm a little wary of buying more gold right this instant. I mean, I own a GDX. You can see I bought it back here. I already had two profit taking events, and now I'm thinking maybe I should take more profits. I don't know. We'll see. The point here is, of course, the dollar. The dollar is just super tight trading range. You can see very close action. So between the indicator lines, you can see between the yellow and the green, very tight area. If you zoom out, you can see huge area just a few months ago. So right this instant, dollar could easily break. Well, first it needs to break below the blue line, but then it should, if it continues below the red line and actually closes below 95.52 in this particular case, gold could just skyrocket. Perhaps gold is already anticipating it, but we don't want to jump ahead of ourselves, so let's just wait and see where it goes. Euro versus US dollar, not very decisive action. I'm still waiting for a breakout. Again, you can see a narrow trading range for euro. British pound recently hit a low. Notice I actually myself opened a long position. I was betting the dollar, or I'm sorry, British pound would appreciate versus the dollar. It didn't happen. I got stopped out. Notice what happened afterwards. Another continuation lower. So this is just showing that you need to be exiting when you are your stop is hit. Subscribers were asking me about Russian ruble. Okay, well, Russian ruble, here are the Russian ruble futures. I'm not sure you can trade them that easily. Some countries allow for it. I don't know if the United States allows it. This is a Russian ruble future, so straightforward. There's a breakout on 17th of April, and we can see a move higher, and it looks like it's set to continue higher as well. And Turkish lira I already showed, so this looks like a breakdown, and I mean, it could just continue lower, so in other words, Turkish lira will gain. Finally, let's wrap up with cryptos. Now, I'm not going to cover Bitcoin or Litecoin this week because I have a trade going. But Ethereum, we need to be okay with the fact that even though there was an enormous breakout here, and hopefully you took some profits, because notice this is over 80% gain. So if you took profits, congratulations. But this is just showing how nimble you have to be and how you should not attach to one side of the market. If the market turns around, don't question it, just sell. So notice there was a 80% move into the upside, and then basically gave everything back. This is why I'm keep reiterating, you should be taking profits, you should be advancing your stop, and you should be closing the trades reasonably quickly. Okay, that's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up. The prices did just recently go up, so right now the alerts that I was just showing you, and I send alerts on many different securities, so you're getting just a tremendous deal at $24.95 per month. Now, if you want to trade on your own, just get your own trading indicators. I can set you up in about half an hour. It's super easy. $29.95 per month, so you can of course get a discount if you get a yearly. Best value, of course, is to get both the alerts and the indicators, currently at $49.95 per month. Big sale if you buy at 1 year. So hurry up, this sale will end. Okay, that's it for today's recap. If you have any questions, please send them in. Once again, thanks for watching, and please share this video with others. If you have any questions, ask me, and please like this video as well. Thanks for watching. Bye-bye.